Global commercial property investment fell by 20% over the year in the first quarter of 2019 to reach a total of $311 billion US. The fall in investment was particularly strong in Europe as total commercial property activity tumbled by 32% over the year compared to a drop of 11% in the US. While the transaction volumes are always quite sluggish in the first quarter of the year, the first quarter of 2019 in Europe was the weakest in 6 years. Yet, we expect the current supportive cycle to continue this and next year, owing to accommodative monetary conditions through at least the end of 2020 and on the back of still improving labor markets. Also, given that interest rates will stay low for an extended period, real estate will continue to provide an attractive spread over bonds and lower volatility relative to stocks. Yet the activity in the real estate sector, although will be sustained, will be weaker and amid slowing GDP growth and lower improvements in employment. Furthermore, the outlook will be clouded by risks posed by the external environment, such as trade war, Brexit, weak Chinese economy. All things considered, real estate investments in Europe, although weaker than in 2018, will remain quite robust this and next year, with property prices and rents still rising a little more. Yet a moderate investment activity could stay sustained even beyond 2020, as the monetary policy normalization will be in all likelihood very gradual, and economies should operate at their long-run potential unless external risks materialize.